Top 10 Real Estate Investing. So, you've decided to go for your first real estate investment, or maybe you are already a seasoned investor but need something quantifiable to back your decision. It goes without saying that the real estate market is a tricky horse to break, so here are 10 essential rules for successful real estate investing that you must follow to steer clear from a loss. Let's find out what these rules are. 1. Understand that knowledge is power. Knowledge is power. The more you know, the better choices you'll be able to make in life, and that doesn't just apply to real estate investing. Don't let others make your decisions or push you into taking the wrong path. Discover the truth for yourself, arm yourself with knowledge, and follow your instincts. With regards to educating yourself, you can categorize education into 3 broad categories. Academic education is learned in school, professional education is practical knowledge that helps us do better in our careers, and financial literacy is about using your money wisely. 2. Set your own investment goals. We all know the importance of setting goals and how it helps in achieving our targets, but how many of us actually end up following those goals to the letter? The biggest problem with this particular rule for successful real estate investing is that while setting goals is necessary, few of us make those goals practical enough to be achieved in the near future. While long-term goals are essential, it is vital to break them down into short-term steps that will eventually help you hit the long-term target. 3. Make long-term investments. A temporary hike in the market is undoubtedly going to tempt you to invest in real estate for the short term, but every seasoned investor knows this. Real estate investments are always made with the long-term appreciation values in mind. Aiming for short and quick gains in a volatile market can actually work against you. 4. Search for properties with a positive cash flow. Cash flow refers to the amount of money moving in or out of a business venture. When you're investing in real estate, you must always look for properties that ensure positive cash flow or the rate of return in the long run. A positive rate of return can be ascertained when you consider the equity on your property, which will grow over time, due to an appreciation of property values backed by inflation. 5. Choose your location wisely. Every city in Pakistan has its trends with regards to the real estate market. A quick overview of the H1 reports for Karachi, Lahore, and Islamabad would tell you just how differently each market has performed in comparison to the other during the first half of 2019. Keeping that in mind, one of the major rules for investing in real estate is that you should not let emotional ties dictate your investment decision. 6. Take an organized approach for your property search. One of the rules for successful real estate investing is to start your property search from a wider scope and to narrow it down to specifics as you go along. Start at the top of the geographical chain and determine which city would be best for your future investment based on its current trends and your risk appetite. 7. Diversify your investment portfolio. Diversification generally means investing in more than one market to safeguard your interests, but as a real estate investor, you might wonder how to make it work in your favor. Diversification, in this case, is location-specific. For instance, Lahore's market was favorable, and you've made a couple of investments there. For the next few, avoid dedicating all your funds to the same geographical location. 8. Consider outsourcing property management. You've bought and rented a property out. Now, you have a choice. You can either manage your portfolio of rentals on your own or hire a firm to do it for you. While many of us would choose the former method, seasoned investors often go with the latter. Because this delegates the task of rent collection and property maintenance to a third party while the investor is left with plenty of free time to find more properties to expand their portfolio further. 9. Manage your own investments. Always invest in a property directly and maintain physical control over it. You should decide whether you want to rent it, sell it, or wait for a turn in the market. Do not lean towards the ownership of real estate via funds, shares, or partnerships. Paper-based investments often make you the owner of a property with none of the rights and authorities of an owner. Be actively involved in your real estate investments and make your own decisions with regards to the ownership of a property. 10. Invest your money smartly. While investing in real estate, you often have the option of either buying a single property for its total worth or putting in a down payment for a fraction of the cost on multiple properties for that same amount. While the first option gives you the chance to own one property, the second option allows you to own more of them. What about the remaining installments though? Well, if you're renting out all the properties which you need to pay installments for, your tenants will end up paying you for owning the house over time. Like, comment, share and subscribe to my channel.